US stocks were trading at about 3-month highs in the early trading hours on Wednesday. Investors moderated their zeal about the prospects of rate cuts in the United States. Nowadays, some market players reckon that the recent rally was apparently a rebound at the end of the year rather than a full-fledged bullish trend. Hedge fund managers caution that the ongoing tax and fiscal policy, the presidential election next year, and the recession fears could act as a headwinds for Wall Street. Wall Street is making efforts to extend the bullish trend, but trading is going to be quite ahead of a Thanksgiving Day. In the early New York session, the benchmark stock indexes inched up by 0.2%. The zeal has ebbed away, so the Fed minutes are of less importance in the context of the recent Wall Street rally. The major stock indexes have jumped by 11% since late October, having hit record growth in recent years. Besides, the indexes have grown by 9% since early November. Hence, November is one of the strongest months for the US stock market. Investors are anticipating a Santa Claus rally as the clock is ticking down to December, though analysts expect growth of less than 1.5% on average. Bearing in mind the solid increase in November, the US stock market could show a modest dynamic in December. The S&P 500 has surged by more than 18% since the beginning of the year. Someone assumes that the bulk of the profits have been already earned this year. All in all, the year of 2023 has been successful for stocks despite high volatility. US stocks are likely to consolidate at their highs in the final months of the year. Technically, the S&P 500 is a step away from its one-year high of 4,600 points. It has perked at 4,560 points this week. The US dollar clicked into gear and is now trading with confidence. The hawkish minutes of the Federal Reserve gave fresh impetus to the US currency and enabled its recovery. The rate-setting committee needs to collect more evidence of a slowdown in inflation before they bring up the issue of cutting interest rates. In this context, traders have to digest a new batch of data, searching for fundamentals for the dovish revision. From now on, the market is anticipating high-impact reports. Before the policy meeting in December, the central bank will scrutinize non-farm payrolls and inflation data for November. These reports will help the US Fed make further policy decisions. What's going on with the US dollar now? Technically, dollar bears are taking a pause before Thanksgiving Day, but they are still holding the upper hand. Market players could revise their sentiment radically. The minutes of the last Fed's meeting are hardly impartial because the meeting was held before the publication of the inflation data. Meanwhile, inflation had already lost steam. Support levels for the US dollar index are determined at 103.30, 103.15, and 103.00. The upward move could face resistance at 104.20 and 104.50. Today, investors are absorbing a weekly update on the US unemployment claims. The number of first-time jobless claims dropped to 209,000 last week, and the figure went down sharply from a 3-month high looked last week and ended up way below the consensus of 225,000. New durable goods orders slumped by 5.4% on months in October, reversing down from an increase of 4% in September. The fall is much steeper than market expectations of a 3.1% decline. It's the second sharpest fall in durable goods orders since April 2020. The Canadian dollar is in trouble due to a slowdown in inflation. Coupled with a softer than expected data on the other economic sectors, The chance for another rate hike in Canada is much lower, and some of Canada's large banks predict even rate cuts in the coming months. Thus, there are fundamentals to assume that the Bank of Canada has completed the cycle of rate hikes and is gradually moving to rate cuts in the first half of 2024. The USD CAD pair is trading higher amid a recovery in the greenback. The instrument is hovering at around the psychological level of 1.3700. Any attempt to grow higher will encounter resistance at about a weekly high of 1.3750. The next step is at 1.3775. If the US dollar asserts its strength, the USD CAD pair will extend its climb, heading for a one-year peak of 1.3900. Bitcoin sank below 36,000 in the early New York session. The token tumbled by more than $1,500. Traders are worried about more crackdowns on crypto exchanges. The U.S. Securities and Exchange Commission brought charges against the crypto exchange Kraken over trading unlisted securities and the negligence of a registration as an exchange platform, broker, dealer, and clearing agency. The lawsuit also alleged Kraken commingled customers' crypto assets and cash reserves with their own holdings. Well-known analysts, blockchain expert Willy Woo, affirms that Bitcoin will hardly fall below $30,000. From his viewpoint, every time Bitcoin left the bear market and when halving occurred, the price never returned down. According to the blog, an average commission in a Bitcoin blockchain exceeded the commission of Ethereum amid growing interest in the ordinals. The average transaction fee in a Bitcoin blockchain has leapt by 49% in the last 7 days. Our team hopes that the regular videos on the InstaForex TV channel help you assess the market environment. We are glad to receive your comments and answer your questions. Good luck in your trading and see you online tomorrow.